Good morning, everybody. My name is Modusugo and welcome to the Accident and Health Trainee session. Our A&H expert, Dani Honeyman, who's also the Underwriting Head in the Accident and Health Department, is going to be giving us some training today on accident and health with a specific focus on short-term employee benefits. So we do hope that you're going to enjoy that this morning from wherever you are. It is a bit chilly this morning, whether you're in the office or in the comfort of your own home. All right, we do have a Q&A function. So if you do have any questions for Dani, please do pose them in that Q&A function, and we will address those at the end of the session, time allowing. We'll also be responding in the chat itself. A reminder that the session has been accredited for 1 CPD hour. We know how everybody is rushing to that CPD deadline, so you can look forward to receiving your certificates within the next 14 working days or so. Right, without any further ado, let me introduce Dani Honeyman, then, who's going to be giving us some training on accident and health. Over to you, Dani.
Thank you, Nani. Good morning, everybody. Welcome to this almost mini Thursday, considering that Wednesday we've all got the day off. Thank you for spending some time with us today to talk about accident and health policies, made up generally of group personal accident or stated benefit policies. I'm going to share my screen now. So without further ado, as Nani has said, if you give me a second, I'll get that onto the screen. Okay, that is the wrong one. Sorry, guys, we did practice this. Okay, I'm just going to do this.
There you go. It's fine, Dani. Just put it in presentation mode.
I'm putting it into slide mode now. Fabulous. Thank you, everyone. This is why we're in accident and health. We deal with people, not IT. That's why we have the likes of Nani and the team behind the session, holding our hands through all the IT stuff. Guys, before we start, I think it's important to note that we as insurers all understand that accident and health policies are generally potentially quite scary for short-term brokers, purely because it's quite a personal benefit and it deals with individuals and their needs and the human element of a business. So it's not like a pothole has done damage to a car tire. All insurers in the industry are very keen and generally very available to hold your hand through taking clients through uninsured risks if accident and health policies seem to be one of the uninsured line items on their portfolio. So please, after the session, during the session, you're more than welcome to ask us any questions relating to specific portfolios that you might have. We're happy to attend client meetings with you to take you and the client through how the benefits ultimately end up working. So generally speaking, you will know that an accident and health policy has a trigger, which is an accident which results in bodily injury. Once bodily injury has occurred, there is a strong possibility that your accident and health policy will kick in, depending on the nature of the claim and the type of accident that has occurred. You will also notice that in all cases, you've got accidental death and permanent disability, whether it be total or partial, as the two underlying benefits that could result in a policy being put together for your client. Accidental death, what's important to realize is as non-life insurers, the death component can only ever apply in the event of an accident occurring. So as a result of illness or as a result of natural causes, under a short-term non-life insurance, your clients will not get a benefit. Those are then obtained via a life insurance environment. Only accidental death is covered under a short-term insurance policy. If we have a look at permanent disability, there we mention both total and partial. So what you will see is on policy wordings, irrespective of who the insurer is in the industry, you will see that they have a scale of benefits covered in terms of permanent disability benefits. So for example, some insurers will see that permanent disability from the waist down, resulting in paraplegia, will be seen as 100% permanent disability. You then have what we call the partial disabilities, where that could be the amputation of a piece of a finger or an amputation as a piece of a toe, as an example. So it's important to realize that If your client says, I have a disability claim, all claims will be dealt with based on the specific circumstances that have resulted in that permanent disability a claim being put forward. Okay. Permanent disability claims are generally also the ones that do take a little bit longer in some cases, because we might need to wait for a doctor to give us a prognosis. So initially, while there is damage that has resulted in paralysis, the doctors might say to us, but that's normal for the human body to almost paralyze itself so that it can focus on the injury site and have that site be repaired internally by the body. With physiotherapy and with time, you might find that disability is non-existent because the body restores itself to its normal way of being as it was prior to the accident occurring. So in cases where there is an incident and we've got to keep very close contact with the doctors to get updated medical reports, etc., we will hold off. Or insurers are potentially going to hold off on settling any of those claims until they know what the actual final outcome is of the treatments received. Having said that, though, there are some disabilities which are quite clear-cut. So, for example, if you get into a motor vehicle accident and you were able-bodied before and you are permanently disabled or paralyzed from the waist down following that accident, paraplegia is quite a simple permanent disability to have diagnosed by a neurologist, as an example. So in those particular instances, once we've got all of the claims documents, we're not going to hold off on settlement of a claim. Why I mention that is because you will see that most policies have an insuring clause which confirms the period within which claims need to be proven. So in some cases, you might see that insurers are liable for claims that are incurred within a period of, or costs that are incurred within a period of 24 months from the date of accident. And those costs could be for death, for permanent disability, for income protection, for emergency expense shortfalls, non-medical expense cover as a result of hospitalization, and then any one of or a combination of automatic extensions. So if we have a look at the income protection benefit, that in the old days used to be known as a TTD, or temporary total disability benefit. So here you've injured your body and you are not able to go to work and continue doing your work function, but only for a period of 6 weeks. So it differs from permanent disability in that you're only off temporarily from work to help your body recover. After that 6-week period, you're able to go back to work and continue doing your normal functions as you would have prior to the accident occurring. So here you've got examples of broken legs, broken arms, that type of thing. For example, in the mining industry, a miner needs to get full medical clearance before he's able to go back underground to perform his functions. So while he has been booked off work for a 12-week period, as an example, the policy will continue to pay the income protection benefit to the company, because that ultimately covers the company for your inability to generate your normal earnings. The company is still able to pay you your normal earnings subject to an excess or a waiting period. Now, in most cases, you will find that income protection or TTD benefits have a 7-day excess. Obviously, you would need to check the policy documents to make 100% sure that an excess for a particular client hasn't perhaps been increased, depending on the nature of their industry. You'll find that where some short period policies are put in place, that's for very specific contracts, as an example. So where an insurer will give a short period contract for the building of an apartment block, that job might only need to be in place, that policy might only need to be in place for 6 months, as an example, because that's the contract duration. So you might find that your waiting periods or your excesses on income protection will be slightly different. You might find that an insurer might want to reduce the period that the income protection is applicable to. Ordinarily, it is anything between 52 and 104 weeks on a standard annual policy. But where it's a short period policy, you might find that the insurer might want to reduce that cover for 12 weeks, 26 weeks, whatever the case might be. So it's always very important to get the understanding of the wording and then always to read it in conjunction with the existing policy schedule to see if there aren't any anomalies specific to that particular risk. We also note that under the income protection benefit, some insurers are able to give cover for serious illness as well. Now, you will know that when taking out an accident and health policy, GPA stated benefits makes no difference what the structure is. If we have serious illness covered under the policy, there are certain rules that companies need to abide by where the insurer is happy to extend this benefit. So it's not something that covers your pneumonias, bronchitises, and that type of thing. The insurers will have a very specific set of conditions that are covered under this particular section of the policy. So in some cases, it may include cancers, strokes, heart attacks, multiple sclerosis, those types of conditions. Where a person has been diagnosed as a first-time positive diagnosis within that insurance period, the policy will apply. It's important to realize that because when you take out a GPA policy or a stated benefit policy, there's no medical underwriting required at underwriting stage or at inception of policy stage. So what there is, though, is there is a pre-existing clause which tells you that any pre-existing conditions will not be covered under this particular insurance policy. So it's important if your client qualifies for serious illness cover under the income protection benefit, it's important that you have the chat with them so that they can let their employees know. This is a first-time positive diagnosis policy only within that particular insurance period. Okay. Your serious illness income protection or TTD benefit also attracts an excess. It may be different to the excess applicable to accident-related time off work. Generally speaking, it could be something like a 30-day excess, which ties in with the company's contract of employment, which says that that person has sick leave for 30 days in a 3-year cycle. So the first 30 days will always be excluded. Thereafter, you will find that the policy will pay the company who owns the policy on behalf of their employees, will pay the company that person's weekly benefit under the TTD benefit or income protection benefit, which allows the company to pay them their salary while they're off work receiving chemotherapy or dialysis treatments, as an example. Okay, the income protection benefit may also have a different maximum period to the accident income protection benefit. So you might find that the serious illness component is limited to a maximum period of 1 year or 52 weeks only. Okay, again, it's very important to have a look at the policy schedule. Also have a chat with the company to see if they are planning on extending this benefit to all employees, because remember, companies don't necessarily need to take out a GPA or a stated benefit policy for all employees. We do have clients that opt to rather take the cover out for their admin staff only or their sales reps. If their workforce is mainly made up of sales reps who are permanently in their cars driving from client to client, they might decide that from a cost perspective, they would prefer to only cover their reps under the policy. Okay, so remember, your insurer is able to structure policies in any way suitable to the company, specifically if there are financial requirements in place as well. So here you will see on most insurers' proposal forms that they do offer an opportunity to add multiple categories to a policy, as an example. So here you might find that you might have management on a higher benefit option, with the admin staff on a medium benefit option and the workforce on a lower benefit option. Policies are completely flexible in their nature and design, so they can be structured in a way that suits the client's specific benefit requirements. Okay, so that's also important when you do have the chat with a client, that they understand it's not a one size fits all for their staff complement. Together with your insurer, you're actually able to tailor a policy that best suits their requirements. So even if you only work in the hospitality industry, as an example, all hospitality policies don't have to look the same. You can structure them in a way that is different for each of your clients, but still adds value to your individual clients and their employees. If we have a look at the emergency expense shortfall benefit, again, in the good old days, without trying to show my age here, it just simply got called the medical expenses benefit. It's important to realize that with demarcation being what it is at the moment, non-life insurers are limited to how and when medical expenses are covered under a policy under a benefit called emergency expense shortfall. So you will see that when claims are submitted, insurers will generally ask for a copy of the client's medical scheme claim statement to show what was paid by the medical scheme in order for the shortfall to be recovered from the policy itself. It's easier for insurers when they get a medical scheme claim statement, because there we can already see what the insured person or the claimant is in for in terms of uncovered costs, not covered by the medical scheme. So there we simply receive the statement and we're able to extend settlement under that particular circumstance. Where there isn't a medical scheme in place, it's always important to remember that the GPA or stated benefit policy is a reimbursement policy. So at no point will costs be paid directly to a doctor. The client or claimant will need to pay for the costs themselves and submit that together with the medical invoice through to our claims department or to your insurer's claims department, who will then ultimately use that as part of their settlement calculation. While we're talking about emergency expenses and income protection, it's important to realize that where injury on duty claims occur, that these are covered slightly differently under a GPA policy, in that we need to wait to see what COID will pay in terms of income protection or emergency expenses in order for us to top those benefits up, thus allowing the client to still receive their 100% benefit settlement. So for injuries on duty, accidental death and permanent disability are generally not impacted. Those will pay as per the sums insured noted on the policy. Your income protection benefits and your emergency expenses benefits, that is where most insurers will need to reduce their benefits to top up the existing benefits applicable to COID or RMA if it is the mining environment. That is simply done to make sure that there is no form of overcompensation that occurs. We certainly don't want to be an insurer or in an industry where people realize quite quickly that if they injure themselves on a regular basis, they get their full policy limits and then the full benefit from COID or RMA. Okay, we don't want people to be lying on couches, having injured themselves on a regular basis, knowing that they're getting double income, as an example. The same theory applies, though, to your emergency expenses, because there you can't pay one medical account more than once. So we will wait, or insurers will wait to see what the COID or RMA settle, and if there are benefits that are not covered, then those will get covered under the emergency expenses shortfall benefit under the GPA policy. We've only, as SHA, seen one claim where the emergency expense shortfall benefit wasn't paid in full by COID, and that was for a young guy who drove a tuk-tuk for a brand and marketing company. The tuk-tuk had a bucket full of beers on the back, and he literally got hijacked, and he got smacked around a few times, and he ended up losing all of the teeth in his mouth. That particular youngster wasn't keen on getting dentures. He didn't think it would be particularly sexy to have his teeth next to him while his girlfriend, in a glass next to him while his girlfriend was lying next to him in bed. So he opted instead to have implants done. So in that particular instance, once we knew what COID weren't going to pay, our policy, subject to the policy limits, was able to assist this youngster get those implants done. Okay, again, it's also important to remember that with demarcation, we do need to make sure that the medical scheme hasn't covered a portion of those costs as well. Non-medical expense cover as a result of hospitalization is actually one of the automatic extensions offered under our particular policy. What it does is, it is in the old days, and most insurers have a hospital confinement or a per day benefit whilst in hospital. This is exactly that. So while the person is in hospital receiving treatments following their injuries, the policy is able to extend a benefit per day in hospital. It's not linked to a medical account. It's not linked to a ward type. So if the person decides to upgrade to a private ward because of the nature of the injuries, they're very welcome to do that, knowing that they are going to have this medical expense cover in the background that will help them top up the costs while they're in hospital. Okay. Again, looking at demarcation, we are limited to the amount that we can pay. So the insurance industry at the moment, the limit is just over 30,000 Rand as a lump sum, but you will find that most insurers under the non-medical expense cover will ultimately allocate that to a per day benefit for a maximum of however many days. In most cases, the insurers will still ensure that they have either an excess or a franchise applicable to that particular benefit, so that it's not necessarily paying from Rand 1 on day 1. Okay, just a reminder, an excess is where, if, for example, it's a 48-hour excess, that excess tells you that for the first 48 hours, no benefits are applicable. After 48 hours, benefits start becoming payable depending on how many days that person is in hospital for. A franchise, on the other hand, will tell you it might be a 48-hour franchise, but once that person's been in hospital for 48 hours, the franchise indicates that the benefits will be recalculated back from day 1. Okay, so that's the difference between an excess and a franchise. Again, it's something that the industry uses as a whole, excesses and franchises. So it is important to have a look at what the policy schedule states and the automatic extensions, because most of your automatic extensions will have the benefits associated as a lump sum benefit or the sums insured, and then whether it's an excess or a franchise. We mentioned the automatic extensions as well. Again, this is nothing specific to SHA or to any of the other providers in the industry. All of the GPA and state benefit providers or insurers will include what they call a schedule of automatic extensions on their policies. What those are generally insurer allocated benefits based on the type of claim that is incurred. So if we have a look at a person who's had a motor vehicle accident and they are paralyzed from the waist down, we all know automatically that that person definitely qualifies for a permanent disability claim. Once the claim's been processed and all documents have been received, we know that permanent disability, sum insured, is applicable to that particular claim. What the client may not necessarily know at that point is if that person has had modifications done to their car to bring the foot pedals up to the steering column so that that person can continue driving and doing their normal jobs. If they've had ramps built at their homes where they would ordinarily have a step, obviously, steps are impossible if you're in a wheelchair, so that needs to have a ramp built. If they've had modifications to their homes in terms of showers, putting in handrails and bathrooms and that type of thing, or if the person's ultimately lost a limb, physically lost a limb through amputation, if they are looking to get a prosthetic limb, our automatic extension or the industry's automatic extensions, ours is called mobility, will then be added to the cost of settlement of that claim. So if the client is expecting 100,000 permanent disability benefit as an example, they will get 100,000 plus the costs associated with modifying their cars, etc. Okay, so they get that over and above. The automatic extensions I did mention are insurer allocated, but most insurers also have automatic extensions like trauma counseling as an example. So there, that is a benefit that the claimant can let the company know about. I've had an in-house robbery and my children witnessed me getting beaten up and tied up, and it was totally traumatic. Can we have the trauma counseling available under our GPA policy? That's what the benefit is there for. And it is able to extend to family members if we have a look at trauma in particular. Okay, which I think is quite important, because it's all well and good for an insurer to provide cover to an insured person, but if their family are in the same situation as this particular criminal act, you would want to know that they've been taken care of as well. Okay, again, all insurers have automatic extensions. There are one or two slight differences between the schedule of automatic extensions that are offered, but generally speaking, they're applied in the same way. Okay, if there is a claim for accidental death, disability, income protection, or emergency expenses, depending on the claim, there is generally an automatic extension that is added at the end at settlement, claim settlement stage. I mentioned in the beginning of the session that we understand that state of benefits in GPA is a little bit scary, only because we've come to realize that in the short-term environment, a lot of brokers are nervous to sell it because it replicates or seems to replicate benefits that are available in the life insurance market, which obviously short-term insurance brokers are not necessarily licensed to go out and sell. Now, the benefit here is, yes, we do call it an employee benefit applicable to companies for their employees, but it's not the same as in the life environment, where things like I mentioned earlier, death, for example, in the life environment would also cover you for natural causes. Short-term environment, non-life insurers, we're only allowed to extend benefits for death as a result of an accident. But we call it an employee benefit section purely because of the fact that there are a lot, especially because of the last 2 years, there are a lot of entrepreneurial businesses popping up who don't necessarily have the means of putting formal retirement funds and that type of thing in place at this particular point in time. So a GPA or a stated benefit policy would be a fabulous stepping stone for that business to at least offer their employees accident-related benefits, or extend it to include serious illness cover under the income protection benefit. It at least covers quite a lot of gaps in terms of policy gaps that the company is then able to assist their employees with. Okay, so there, for example, we've got smaller companies who are quite happy knowing that their employees, who they oftentimes braai with on weekends because it is a small business, they've become like a family away from family. They just want to know that if anything happens to their employees while they're at least being taken care of by the company, performing their work duties, etc., that should anything happen, they have this policy to fall back on to assist the employee with their recovery process, or the cost of wheelchairs or whatever, if permanent disability does actually set in. Loss of income is probably one of the, if I dare say so, the most underrated benefit on a GPA policy. Remember, we said in the beginning of the session that the policy itself is owned by the company who takes it out on behalf of their employees. As a result of that, your settlement claim settlements are ultimately made to the company, who then promises to pass those benefits on to their employees. The income protection benefit, though, allows the company to pay their employee while they're on sick leave because of a serious illness diagnosis, or while they're on sick leave as a result of an accident and they just need 6 weeks to recover before returning to work, without their actual balance sheet being affected. Because some of these smaller companies have one person performing multiple tasks generally, the income protection allows the company now to also hire in a temp driver, as an example, while still being able to pay their employee, who's their actual driver, while he's off work. Okay, so the policies can still help the business with their normal everyday flow of business without their clients realizing that they have a problem internally, okay, because of the accident that rendered their driver unable to work for 6 weeks. Okay, it is cost effective. There's no, as we mentioned earlier, no pre-medical checks that are required because it's generally an accident-based policy. You can't plan for accidents, they just unfortunately happen. So it's a lot more cost-effective than you would find a life policy to be, purely because of the fact that there's no pre-underwriting. Larger companies might also want to use a GPA policy or a stated benefit policy to plug gaps that they have in their retirement fund modules, as an example. And here is where we are very happy to meet with the life brokers for those companies to go through the different funds that they have in place to see where the gaps exist and how best our policy can plug those gaps. So one of the most obvious gaps that we've assisted with in the past would be things like income protection, loss of earnings, or the TTD benefit, where a life policy might have a 6-month waiting period, as an example, before any form of benefit kicks in. Our policy or the short-term insurance environment policy can cover that 6-month gap through a GPA policy or a stated benefit policy. Granted, it will only be for serious illness potentially or for accidents in most cases, but at least it's a gap filler of sorts. Okay. And as we mentioned earlier, smaller companies, your more entrepreneurial businesses are definitely looking at taking care of their employees. Possibly, I don't know whether COVID might have had a bit of a shock factor to employers over the past 2 years. But we are finding that the smaller companies are just wanting to take out basic benefits for their employees. You will find that in the industry, there is no such thing as a small policy, that's a policy that's too small or too big for your GPA or stated benefit insurers. Okay, so as long as there is an employee who runs a business, he might be a sole proprietor of sorts, who is an architect and runs his own business. He himself is an employee. Policies can extend to include cover for that one and only employee who happens to be the boss of the business at the same time. You'll also notice when looking at your policies that there is something called a basis of cover that tells the client how the policy is going to respond and when the policy is going to respond. Now, in most cases, GPA and stated benefit policies are issued on a 24-hour basis. Okay. So what that simply means is, if the person is at home having a braai and there is an injury, or if they're on holiday and they happen to be fortunate enough to go on a skiing holiday in Europe and something happens, or whether they're at work performing their duties, 24 hours means that irrespective of where or when that person has the injury, there is a potential claim under the policy. Okay. Occupational injuries indicate that only while the person is in the care, custody, and control of the company will their injuries be seen as valid claims under a GPA or stated benefit policy. Here, just a reminder, permanent disability and accidental death, those benefits, sums insured on the policy schedules, pay out irrespective of any benefits that are recoverable from COID or RMA. Only the income protection and the emergency expenses benefits get reduced in accordance with what those legislated benefits providers will settle. There is another basis of cover called occupational injuries plus commuting to and from work. We do have a few clients that we see in the market that do have this cover in place, and it's generally for companies who have buses that specifically are earmarked to drive their staff to and from stations, bus collection points, their homes in some cases, etc. Okay, it's important that your clients understand, if they do take the occupational injuries plus commuting basis of cover, it's important that they understand how the commuting actually works. Most insurers will specify that it is direct commuting to and from work. So to make 100% sure that the insured company understands that if it's a Friday afternoon and their staff decide to go for a pub run before actually going home, that the policy ends when the person stops their car at the pub. Okay, coverage under the policy ends until the Monday morning when they leave home to go straight back to their place of work or their site of work, if it happens to be a construction site or a survey or whatever the case might be that needs done. Okay, so that's very important. As I mentioned, we do have a few clients on that particular policy, but they perfectly understand when, and their employees understand when the cover starts and stops. Okay, you'll find that there are other insurers who will potentially be making announcements coming shortly on a fourth basis of cover that we're able to assist with. So yeah, keep your eyes peeled for communication coming out of SHA specifically on that. It's very exciting, and it does allow us an opportunity to help clients up front for their injuries on duty. You'll also you'll remember that I said in the beginning of the session and throughout the session so far that you've got either a group personal accident policy or a stated benefit policy. Now, both policies operate on exactly the same basis in that they offer accidental death, permanent total disability, permanent partial disability, income protection, either for accident or for accident and serious illness, and then your emergency expense benefits as well. The difference between a GPA and a stated benefit policy is simply how the sums insured are reflected. So a multiple of salary policy will reflect your death and your permanent disability benefits as 1 times annual earnings, 2 times annual earnings for death and permanent disability. That is known as a stated benefit policy. Where you've got your fixed sum insured policies, death is shown as 50,000 Rand, permanent disability is shown as 50,000 Rand. Those are known as group personal accident policies. Both group personal accident and stated benefit policies have the same wording. They've got the same benefit structures in terms of the underlying benefits that can be covered. The automatic extensions are the same. It's just how the benefits are reflected. So we find that a lot of companies tend to go for group personal accident benefits more frequently, purely because when they get the quote, it's much easier for them to understand what benefits they're buying for the premium that they're paying. So it's easier for them to see, oh, okay, so for 50,000 accidental death and 50,000 permanent disability, I'll be looking at paying about 8 Rand an employee a month, depending on the size of the client. Okay. Your multiple of salary policies generally tend to be those that are taken out by the larger companies who are more familiar with the percentage-based benefit structures. Perhaps that's how their retirement funds work. So they're more familiar with those particular policies. Okay. We can do multiple of salary policies for companies of any size, as we do for group personal accident policies. We can do them for companies of any size. Okay. So it just depends entirely on how the company would like to reflect their benefits. You'll find that in some cases, companies quotes, if they give their combined annual earnings for a stated benefit quote, you might find that that stated benefit quote comes out a little bit more expensive if the company has asked for comparative quotes. You know, maybe they only want 50,000 death and disability, but then they also want a 1 times annual earnings comparative quote under a stated benefit structure. The only reason why that happens is obviously if the employee earns more than 50,000 Rand a year, and all of the employees earn more than 50,000 Rand a year, their 1 times annual earnings value will be more than the 50,000 Rand under the GPA policy. Okay, but we're quite happy to have the discussion as well, as will most of our industry partners, have the conversations with the clients to explain the differences and to look at putting a policy schedule together that ultimately meets the client's financial requirements. You'll also find that most insurers are able to combine group personal accident and stated benefit covers under one particular policy. So you'll find that potentially the executives and the MDs and whatnot might decide that they want their benefits reflected as 3 times annual earnings, whereas for the remainder of the workforce, they'd like to give them 500,000 accidental death and 500,000 permanent disability. Okay, again, we have somebody in our business, his name is Dave, who likes to reiterate the fact that these types of policies are as flexible as a mud flap. So you tell us what is required, and you tell your insurer partner what your requirement is, and together we'll make it happen. All right. You'll also see that most or all short-term group personal accident and stated benefit policies have what is known as an any one life limit and an accumulation limit, or a per event limit. Now, these are particularly important, and they are standard to most of the policies that are issued in the market. So you might find that an insurer has an any one life limit where they specify that that limit is 5 million rand. They'll have an accumulation limit where they might specify that that accumulation limit or that event limit is 100 million rand, as an example. Okay, have a look at those limits. Where you've got a small GPA policy in place, and we know that it only covers 10 people and they each have a 50,000 disability or death benefit, your any one life and your accumulation limits are potentially never going to come into play. Those are just the standard maximums on the policy, but because of the low sums insured that are covered, they're not necessarily something to even be overly concerned about. They're there purely because they're standard sublimits under our policy. What is important to look at is where you've got a company with very high sums insured. So you've got a company and they've got a CEO who earns 7.5 million rand a year, and he wants a 5 times death benefit, 5 times annual earnings death benefit. Have a look at the any one life limit. It's absolutely critical that as broker, and this is where you call on your insurer partners to make 100% sure that this is done. You will see that some insurers ask for the top 5 earners' earnings without needing to specify their names. It's because as insurers, we've got an obligation to you to make sure that our limits are actually sufficient for the risk that we are writing. So that guy that's earning 7.5 million rand and has asked for a 5 times annual earnings death benefit, as an example, if he is on a policy that has an any one life limit of 5 million rand, we know that as brokers, you potentially have a massive PI claim coming your way, because that client is going to expect 7.5 million times 5, and that is what the company is going to expect to pay that CEO or that executive's family. So have a look at that. It's absolutely critically important. Your insurers will always want to help you out with that. Depending on who the insurer is, some will ask for it up front, some will ask for it during the policy period. At SHA, we like that information up front so that we know that we're in for no surprises come claim time. Okay, your accumulation limit works on exactly the same basis as an any one life limit, but why that's important is you've got to look at the type of risk you're covering. So if, for example, your client is a mine and they have the potential to have 1,000 miners underground any one time, and they're in an area that has high seismic activity, it's very important to have a look at the worst case scenario claim in the event of there being a cave in and those 1,000 miners are underground at the time, they're trapped and they all die. Okay, so that is the accumulation limit. That's the maximum limit per event. So again, when in doubt, call on your insurers. You guys as brokers need to know a lot about like 30 different classes of insurance covered under a client's portfolio. The insurers who specialize in GPA and stated benefits generally only have to be really good at one type of business, one class of business, and that's GPA and stated benefits. So use your insurers to get this information, to ask the right questions of the clients, so that once the policy is placed, you know you've placed your policy in good hands, and come claim time, there will be no horrible surprises or reasons for claims to not get paid. We do find that GPA and stated benefits is generally a section that is overlooked. And again, I think it's probably more because of the fact that it could resemble life insurance benefits, and as short-term insurance brokers, we don't always, as insurers, give you the tools to go and have a conversation with the client to tell them why short-term insurance policies are different to the life insurance policies. And that's where your relationship with your insurer will help you place those covers, where the insurer will do all the talking and help fill those gaps from a portfolio perspective. Obviously, we all know that as part of the phase regulations, brokers are required to talk to their clients about uninsured risks. Now, we've got, and most of the industry will have, documents that you're able to pass on to the clients, which give a very basic but a very good overview of the types of benefits that they would qualify for under a GPA benefit, as an example. So speak to your insurer partners when you have your renewal meetings with your clients. Add in a frequently asked questions document or a basic marketing document, which provides details of the types of benefits covered. Speak to your insurer partners. You know, if you're going to go and look at a school, as an example, and that school wants cover for their kids, speak to your insurer partners, because they can give you examples of claims that can help the client understand where the claims come from, how they're covered, etc. Okay, because we all know that claims are the best marketing tool that any insurer can have, not only because it gives indications of how the benefits actually work, but it also tells you how that insurer will respond at claim time. So some of the more common claims that we see are clients needing hospital guarantees because of injuries on duties. So depending on the insurer partner that you're with, most insurers do have providers that they've outsourced services to in terms of road accident fund claims or COID or injury on duty claims. So speak to your insurer to find out whether they have those partners on board and how they go about assisting clients with access to hospitals that are COID friendly, that will admit that injury on duty patient without any question. Motor vehicle accident, you know, when we look at the definition of accident under a GPA or a stated benefit policy, I think motor vehicle accidents are possibly the most common or the most obvious when it comes to determining what is an accident. I think what else we need to look at is things like animal attacks. Those are considered accidents under a group personal accident policy. Why? Because a lot of insurers cover lodges, guest lodges and bush lodges, or landscaping companies where dog bites might be prevalent. So animal attacks are considered as an accident under our policy as well. We also include injuries sustained as a result of criminal activities. Unfortunately, we've got to be mindful to the fact that there are desperate people who will have no problem with a home invasion or an attempted hijacking where the driver of the vehicle gets shot in that potential attempted hijacking. Okay. We talk about household robberies. We have seen in our specific environment quite a few claims coming in where people have been tied up and their children have been verbally abused and dads have been smacked over their heads. So we see a lot of horrible claims that are more personal to the employee's family coming through. Paralysis from motor vehicle accidents, we do see those quite frequently. We've seen paralysis as a result of home-based injuries happening as well. We had a gentleman who was busy clearing gutters on his roof, so he had his ladder up, and he just slipped off the ladder and he got electrocuted on his electric fence prior to landing and breaking his neck on the ground. I mean, it's a horrible claim. And, you know, this is why clients have GPA policies in place, to take care of those things that are absolute accidents and could never be planned for. And that is why group personal accident is there to help those guys with those one-off costs. You know, the permanent disability benefit can help with the specialized wheelchairs, can help with the medical costs, you know, your medical medication and medical bags that are needed on a monthly basis. Under the serious illness component, we've also seen quite a few serious illness diagnoses coming through where people are off work for up to 6 months, receiving cancer treatments as an example, with dialysis. You know, you've got your multiple sclerosis covered there as well, and Parkinson's disease. So as the condition degenerates, the person is not necessarily able to work at that particular point in time. So these benefits, and these are real claims that we've seen in our environment, can prove to be very, very important to a business and the employee. You know, prior to life insurance markets deciding what to do with retirement funds and that type of thing, there would be a gap in the interim while that person is receiving those treatments. Employees injured whilst playing sport. Obviously, we've got school children that are covered within the insurance industry for group personal accident benefits. We've got people who have social sports teams in their businesses. Those are all covered. If the person has a 24-hour policy, all of these injuries will be covered under a group personal accident policy as well. What's important to realize is most insurers will have an exclusion on their policies for professional sports persons. Now, it's not to say you can't get cover for professional sports. Those certainly are available within the market. So you do just need to speak to your insurer because there are policies that are put in place for professional sports people, specifically to cover their contracts, whether they be South African-based contracts or European-based contracts that piggyback off of their South African contract. The reason why it's not covered, or professional sports people are not covered under a standard group personal accident policy, is because the definitions and the cover are slightly different. You know, what we might see as a broken ankle could end up being seen as career-ending cover to a professional rugby player. So in those particular instances, speak to your insurer. Just because you've got a rugby player who's needing cover, and group personal accident policies clearly state professional sports are not covered, have a chat with your insurer anyway, because you will find an insurer that is able to provide cover for those professional sports people. Okay. All of the policies have exclusions, and they will all be different depending on the type of, or depending on the insurer that's being approached. In most cases though, suicide or intentional self-injury is an exclusion under a GPA policy. One thing to note here, please, is if your client says to you, I have had a suicide in my business, I'm not going to be submitting a claim. Please tell the client to submit the claim nonetheless. What you might find is the insurer might open the claim and then close it straight after, saying suicide is an exclusion under the policy. But what we have found as insurers is that there are cases that get overturned from suicide after the SAPS investigations have happened. They get overturned in quite a few years, in quite a few months in future, purely because the police have now identified a suspect and they have now confirmed that the suicide was actually murder made to look like suicide. It's important to have those suicide claims notified up front, because you don't want to find yourself in a position of having to go back to the client 10 months down the line and saying, well, sorry, because we didn't tell the insurer about the claim within their notification period, we now can't submit a claim because it's going to get rejected as late notification. Okay, so that's critically important. Pre-existing conditions are generally covered under the policies as well. Okay, driving under the influence of drugs or alcohol, general exclusion under most of the policies. What's important to remember, though, is that there are insurers who have bought back a portion of the death and the permanent disability benefit into the actual settlement environment in the event of the driver of a vehicle passing away in an accident and insurers waiting for blood alcohol results, as an example. So what the insurer will ultimately end up doing is they will pay a portion of that death benefit, depending on what their automatic extensions say. If the blood alcohol results come back proving that the person was under the influence of alcohol and above the legal limit at the time of death, then that insurer will just simply close their claim file down. Okay, they don't recover the costs that have already been paid, because that was made up front to make sure that the family was at least able to keep food on the table and kids in school. Okay, professional sports, we've already just touched on that. So while this type of group personal accident or state of benefit policy excludes professional sports, there are policies available in the market which will provide cover. Okay, flying risks, that's another thing where the person is a pilot of a plane. As an example, general exclusion under a GPA policy. But as we've done with alcohol, we've brought a portion, or insurers have brought portions of that flying risk exclusion back into the policy through their automatic extensions. Because we find that a lot of business CEOs and executives are now bored with the white river rafting and bored with the bungee jumping. So they now go and buy themselves a little plane or a little gyrocopter to play with those on weekends instead. So should anything happen to that person while they are flying their own planes for non-reward and for absolute social purposes, there is a portion of the policy that can pay out, even though flying risks are a general exclusion under the policy. And then obviously participation in rights and civil commotion, that is generally an exclusion under most insurers' policies. Okay, so here where an insurer covers universities as an example, or is in a highly unionized environment, they find themselves covering people in highly unionized environments. It's important to always point out that rights and civil commotion are not claimable under the GPA component of the client's normal insurance portfolio. Okay, so guys, that was generally GPA and stated benefits in a nutshell. We do have time now to look into some of the questions that have come in during the session. I'm just going to go to the Q&A session. No questions. So guys, it's important, I think, for you to realize that you've always got your insurer partners available to you to partner at meetings, to run ideas by. There is no risk that most insurers will not cover. I think that's very important to understand. So while things like referral lists do exist, so certain business types that the insurer needs to be aware of in order to make sure that they underwrite correctly. So for example, you might find that if there is a security company who is looking for group personal accident cover, what you might find is that the insurer may ask for confirmation of how many of those employees are armed. Do they do CIT, transport services, those types of things. So it's important to have a look at that. The insurers will generally ask you those questions up front, but the more information you can supply, the better the underwriting will be, with no comeback at renewal stage. Brett has just asked, can this cover be on a standalone policy? Brett, absolutely, yes, it can. So from an SHA perspective, we're able to issue those policies irrespective of where the underlying commercial policy lies. Obviously, what you do need to be mindful of, though, is that the client is then going to have two debit order, one for the commercial policy and then one for their GPA policy. Where brokers issue policies off of their systems, obviously then our policy schedule can be sent through to the client, and you can then add the cost of the GPA section to your debit order run, and you can pay us via Boardrow. So most insurers will be quite happy with that arrangement going forward. Maria, will the recording be available? I absolutely do believe it will. So Nani and Chandra, I'm sure, will have that recording either placed on one of our platforms, or we can actually send it out to all of the attendees as well. Thank you for an awesome session. Thank you, Fatima. Lovely having you join us this morning. Thank you. Chandra. Thank you. Chandra has popped in the chat facility. Chandra has just quickly popped the link in there to give us some feedback via SurveyMonkey of this particular session and your findings of the session. So please go ahead, go rate the session via that link in the chat facility. It's always important that we get information back from our brokers because it only helps us benefit and make these sessions better and more impactful going forward. Thank you for informative. Lavinia, lovely of you to join us. Thank you so much. Dave, you have your hand up. Okay, so somebody has asked, Dani, is the external and visible triggers also still applicable? So yes, I'm assuming that the question relates to the definition of what would be a claim under our particular policy. So yes, you will find that there will be things like there's got to be physical, violent, external bodily injury, which will then define whether there is a claim payable or triggerable under a GPA facility. Thank you, SS 326. Lovely having you join us. Lynn Marie, thank you so much. Guys, if there are no other questions, I'm just going to pop back to the Q&A. Okay, so we've answered that one live. Are there any other questions that anybody else would like to pass on to us? Michael, your question is, I would like to know more about cover for schools. I'm happy to deal with that in the session, Michael, or you're welcome to give me a call after the session. We do have cover for schools available as SHA. It covers either the scholars. It then can also extend to cover the staff. That could be anyone. That could be a teacher. It could be an admin office worker. It could be a groundskeeper. The only thing that you need to bear in mind with the schools cover is that we are going to need to know upfront whether it's a high school or a primary school, because obviously with the death limits that we are able to offer for the scholars, we're restricted by legislation as to what the maximums are based on age bands. So if we know that we are covering a primary school and the client has asked for 100,000 Rand death limit, we will then offer terms based on the minimum or on the maximum allowable based on the ages of those children, which will be anything between 20 and 30,000, depending on the age bands. Any child over the age of 14, there's no maximums applicable, so we can give a death benefit that the school requires, even if it is 100,000. So that's no worries at all. The only thing the children won't get under a GPA policy will be an income protection benefit. And the only reason for that is because income protection is just that. It protects the income. Because children are not income generators, they don't qualify for the income protection benefit. But if the staff are covered, we are then able to extend cover to income protection for the staff. So if one of the head coaches has an accident, as an example, then that accident is covered under their section, as is their income protection benefit. With the children, one more thing, sorry, thanks so much, but one more thing is that with the children, they're covered while they're in the care, custody and control of the school. So what we like to say there is that they're covered whilst participating in and on behalf of that insured school. Now, what's important about that is it takes away the admin that the school has to do on a continuous basis if they've got lots of camps and excursions happening. If we know we're covering all the kids for covered or enrolled at that school for that particular insurance period, we do not need to know when they're going on a camp, when they're going on a rugby tour, and that type of thing, because all the kids are covered. We know that it's while they're in the care, custody and control of the school. So if there is an incident, we know that those children will be covered under the policy. Question from Tians, average anywhere applicable? Tians, I'm thinking I'm going to answer your question correctly. So the worldwide, the territorial limits is worldwide. So your clients are covered, whether they have the injuries in South Africa or whether they have them abroad while they're on holiday. Obviously, with international policies, we do recommend that the clients have travel insurance cover in place to take care of the extraction, bringing them back to South Africa for medical care. So that ties in again with the demarcation legislation, which says that your travel insurance policy will then be the first responder and medical aid second. Will cover any shortfalls not applicable. Terence, I'm not sure if you'd like to pop some more in the chat, if you'd like me to expand, or if I have incorrectly answered your question. While you do that, I'm just going, no, I'm referring to underinsurance. Oh, okay. All right. So no, in this particular environment, the Life Officers Association hasn't got any form of restrictions on how many policies can be taken out. So from an overinsurance perspective, as long as the insured person can afford the premium, we can't restrict the cover. However, having said that, where we know that the client has other benefits in place for or other policies in place for death or for income protection, we would want to know about that, because again, we don't want to have any form of overcompensation happening. And we also don't want to make an insured person more valuable dead, because all of their policies together would result in a 20 million Rand claim, as an example. Under insurance, it's so difficult because, you know, life doesn't really have a value. So in our case, when you're looking at covering kids, and anybody on the call with kids will know that permanent disability is a very real consideration that needs to be made, particularly if the kids play school sports, rugby, hockey, whatever the case might be. So there, I mean, if you can afford a 3 million Rand permanent disability benefit for your child, as insurer, we would say absolutely go ahead and take out a 3 million rand policy for your child, because that child will outgrow a wheelchair, and they can only claim once for the permanent disability. So have provision for growth and needing more specialized medical equipment as the child gets older and bigger. Thank you, Fazlin. Nice to see you join. Thank you. Okay, guys, I don't see any more questions coming in on the Q&A. Anything from anybody else that needs to come through? I am happy to stick around a few more minutes. Otherwise, guys, from an SHA perspective, I'd like to thank you for your time this morning. We've got a fantastic accident and health team. The girls, it's an all-girls team. So when I refer to the girls, that's our very capable underwriters within the accident and health team. You will find us on the SHA website under accident and health. You can contact Crystal, you can contact myself, you can contact Shanaz or Itumeleng. The four of us are very happy to assist you with putting together some options for your clients. We're equally happy to attend meetings with you. One thing COVID has taught us old folk is how to use virtual platforms to meet. So it's fabulous. If you find yourself in Cape Town, as Fazlin does, we're happy to join you in Cape Town for a virtual meeting and then another one up in Namibia that afternoon. So just give us a shout. We're very happy to join you at these meetings. The bonus you have is once we've had our chat on GPA, you can just press the red button, cancel us out of the meeting, and then continue with your normal renewal meeting on the rest of the client's portfolio. So please do take us up on that offer. We've had a lot of those interactions over the last 2 years specifically, and I do believe that it adds a lot of value, not only to the client, but to our partnership with you as broker. Where you learn through doing as well. So use us to answer all those questions and help you place that business. Okay, I don't see anything more coming through. So I think that's a wrap, as they say in the movies. So thank you, everyone. Have a wonderful day further.